Hey everyone, in today's video, I'm going to cover part two of the interview with Yashu. In today's video, I'm going to cover the macro environment with Yashu. We're going to talk about the risks with Tesla before we talk about the rewards, because a lot of us love being bullish on Tesla, but there's always risks with any investment. We're also going to talk about stock splits. Is this going to happen 2022 or 2023? You definitely want to check that part out. It's very, very interesting. Now, if you want to follow Yashu, I've included his channel in the bio below. Full disclosure, both of us are Tesla investors, so we're quite bullish on Tesla. We do want to say that everything we say in this interview is only for entertainment purposes only. Please do not take anything as financial advice. So please, if you want to invest in Tesla, please do your own research and due diligence. Just take this video as entertainment purposes only. Hey everyone, I'm a Canadian YouTuber that loves talking about stocks and real estate investing to grow you multiple streams of income so that you can design your best life. I'm a former engineer that now manages a multi-million-dollar investment portfolio. So if you like this video, want more of these videos, please hit that subscribe button and that bell notification button so you get the latest and greatest videos coming to you every single week. So let's get into the interview. Okay, well, we talked about a lot of bullish stuff about Tesla. So I'm just thinking for this year, other than the macroeconomic risks, what other risks are you seeing with we actually kind of alluded to it. Elon's tweets, right? Would be one of them. Like, is there anything more more fundamental than just Elon's tweets causing a bit of a
Yeah, absolutely. I think it's important. I think it is totally important to talk on also the risks of any company and like what, mind you, obviously I believe the benefits vastly outweigh the risks, but that's because I'm a Tesla bull. But I think risks for Tesla, and you highlighted a couple of really good ones, like for example, like supply chain issues. If you talk about that, Dan Ives of Wedbush has come out and said that he sees from what he's been telling his sources have been telling him, supply chain issues in the first quarter to first half of this year are going to be dramatically better than they've ever been in 2021. He thinks in the quarter four print, Tesla came down about 25 to 30,000 units just in quarter four due to chip shortages.
Wow.
Right. And so extrapolating that forward, that's massive. That's, let's say, let's say 30,000 per quarter, it's about 120 more, just from what they have is what he is saying.
Wow.
And by the way, rough ballpark there, I'd have to double check on those numbers, but it's in that ballpark. And so if someone like Dan Ives is coming out and saying, look, supply chain issues across the board are going to be a lot better the first half of this year, dramatically better, is what his words are, then I look at that as one of the key risks coming off, because 2021 was largely about supply chain issues, especially in the first half of the year, right? It was, I think yields were rising up, and then we were talking about supply chain issues for pretty much the whole summer. And so that's big one. That's one big one. If that does not come through, then we can talk about Tesla having to lower production than maybe even they did in 2021. If you're a bear, you're going to say supply chain issues are getting worse, not better. Who knows? I think they're getting better. But that's definitely a risk to look forward to. Prices of cars. Now, obviously, we know Tesla is raising prices like it seems like every week on every one of their cars. The question, the big problem that I see is a lot of bulls. What they do is think, okay, Tesla is raising the price by 2,000. That means they're making 2,000 more per car.
Yeah.
That's not necessarily true, right? Input costs,
right?
Costs go into that. Labor costs go into that. So I still think that, let's say if Tesla raises the price by 2,000, I still think they're making an additional incremental margin on what they're increasing. They're not probably, because they're trying to increase it by a little bit more. Should costs go up even higher. And so, but if you're looking at risks and you want to look at a signal of the risk, you could make the argument that Tesla is increasing these prices because commodity prices are going out of control, and therefore that might dampen their margin. I'm not in that camp of thought, but I think it's important to at least consider that as something to look forward to as a risk, as dampening the margin. The good news is Tesla's making 30% gross margin per car, and 15% operating margin. So it's not like they're running out of leeway, so to speak, even if input costs do go up. But by far and away, I think the last two risks are macro and Elon as a key man risk. I'll start with Elon. Like he sold a lot of his shares that came out of nowhere. I mean, we hit 1250 for the first time. He tweeted on the Saturday, we were at $1,000 in a couple of days, right? Like anything could happen. He could tweet something out. He could say he's leaving Tesla and just focusing on SpaceX full time. And it'd be kind of similar to when Steve Jobs unfortunately passed away, for example. I remember that day in the stock market in Apple. And so, cross my fingers, knock on wood, touch black, everything goes well around there. But key man risk is there with Elon. But that's also, I look at, for every risk, there's also the opposite benefit. That's also the biggest boon in Tesla is that you have the head honcho Elon running everything and running the show. Don't own very many people that could be equipped to run the vast majority of the companies that he's running. Not even one, but he's doing all of them all together. And so key man risk is a big one. And then macro risk is certainly the probably the biggest risk. And we've talked about macro a lot, so I won't have to repeat myself, but really, interest rate hikes, inflation fears as we move forward, pressuring down multiples. The good news here is Tesla's really no longer, I don't consider it a long duration stock anymore, meaning I don't consider the majority of its cash flows to be 3, 4, 5 years plus.
So true. It's so true.
I consider a lot of the cash flow to be this year, next year, 2023. Which, by the way, wasn't the case in 2020. I mean, 2020, they were, net, like net income wise, wasn't a huge amount of profit to look forward to. 2021, more so for sure. I think about $3 or $4 billion net income. But Tesla's earning power as we move forward into this year, next year, that's kind of a medium duration, really, is where you're looking at. So when you look at companies like, take high growth like Zoom or Teladoc, these companies that aren't really making money right now, have great margin, but are pushing their growth out in the future, their cash flows out. I think those ones get hit the hardest. They already have been hit the hardest. They're down like 30, 40, 50%.
Yeah.
In some of the cases, like ARC companies, right? And but Tesla is like kind of trying to morph itself into like into a cash cow, and it's not there yet. But the signals are all pointing towards it getting to that point where, just like you say with Apple, there came a point like Apple had just when everyone said cash cow, they said Apple. Apple is the cash cow, right?
Yeah.
And so Tesla needs to get to that point. It's not there yet, of course, but the signals are all there if you want to read into them, especially on the bull side.
For sure. So I was you touched on the topic about Wedbush, yes, the analyst who is, and Dan Ives, yes, who was saying that we were held back by 30 to 40,000 cars because of supply chain issues. So just running like the numbers that Shanghai could actually produce that many cars, is that because Shanghai was already scaling to produce that many cars? Like, because, everyone thinks, okay, last year, most Shanghai could produce maybe 500,000 cars. So really what we're saying is that Shanghai's scaling in parallel to produce more and more cars so that they could hit, maybe, I think they're building phase 2, right? Of Shanghai factory.
Yeah, I think Shanghai is going to be over 1 million at least run rate. Shanghai is just such a beast. They've done an awesome job of scaling in China. If only we could have 5 more Shanghais, right? But Shanghai has done an awesome job, and they've just sourced cattle, right? With cattle batteries are starting to be delivered soon enough, and so there is that benefit there. I'm gonna I watched, it was a Dan Ives clip off of a CNBC interview he did mid last week. I watched it on the live stream, and so he said about 25 to 30,000 cars is what Tesla was held back due to supply chain issues. That's massive. I think, by the way, I think a lot of those cars might just be sitting in the lot ready to go, right? But they're kind of waiting. And perhaps that's what we saw in quarter 4 is like a last minute.
Maybe it's the buildup.
It's the buildup. But I think I was looking at Tesla's backlog, and they really don't have very much of a backlog anyways. Although I'm not sure how the counting is done. Maybe if a piece is not ready, they're not counting that in the backlog of cars ready to be delivered. So, but regardless, even if supply chains, he said dramatically better. So if they're even half better than what they were last year, like that's just status quo, half better, great. Like that's a boon to deliveries. And so you mix that in, like you're saying, with Shanghai running, with Shanghai's run rate even getting better, and as they build out faster and put out more lines, like they have been, Shanghai is killing it. And the best part is people are projecting, obviously, in the long haul to Berlin and Austin, to be even greater capacity than Shanghai. So and those are about to come online still. So it's just so exciting to think about.
I get over the next 6 months. 6 months. So maybe short-term pain for long-term gain. The other part you point out was Elon's tweets, which is right. Obviously Elon's tweets, they can send the markets. But at the same time, Elon Musk attracts the best talent, like you were saying. And I think what you were saying with Steve Jobs, that story about Steve Jobs saying, no, you got to do this over and over again. The engineers are like, no, you can't fit that. And I could totally relate to the story because I'm just having nightmares from the past, just thinking about that and defending like you can't do it. But the issue is that you're talking to someone like Steve Jobs wasn't an engineer. Like he was, he's very, very smart. But I think he didn't, and I'm just guessing here, that he didn't have the technical grasp. Right. Well, when Elon's saying you can, like he in his mind, it's like it's there, it's already there. He's like 5 years ahead. He's thinking 5 years out, and so when I'm sure the discussions are like a little bit different. Like the engineers are like, oh, Elon could just
spew out how you could do it in like all these technical terms, and it's much more believable to his team. Like it's like this.
Right. He's speaking their
There's
language.
language, yeah, and he is an engineer. Like I mean, I know he didn't go to engineering school, but he is like learning on his own, like how to build rockets. So, so to me, that awesome circle of attracting talent. And you got this team that's like, oh yeah, my CEO, he knows all the technical stuff. He's also like has business acumen. Being a CEO is much, much different than even Apple when Steve Jobs was there.
That's a great point. I never thought about it like that. Like Steve Jobs, like what do engineers hate the most? Not an engineer, but I'm just going to put words in engineers' mouths. Sorry, pardon me. What do engineers hate the most? They hate people telling them what to do when they don't know what they're talking about.
Yeah, exactly it. Yeah, I can say that from my own personal experience.
And they're like the head of marketing and they're telling you, this thing is, they need this thing. Like, what are you talking about? You're a marketing person, right? And so yes, you're right. I don't think Elon's a certified engineer, but you're right. I mean, he doesn't even value formal education when he's hiring people, right? So, but you're totally right. He speaks their language. He's multifaceted in that respect. People that work for Elon, like quite literally like to showboat that they work for Elon. What does that tell you about the work culture? What does that tell you about how far they're probably willing to go to solve problems, right? People that will go to the lengths that need, and to be quite honest, these are big problems, right? These aren't easy problems. Battery chemistry is not easy. Space rockets are definitely not easy. Like, these are big, hairy, audacious goals that Elon has for all of his companies. Neuralink is not easy. So it's definitely, we talked about risk. Yes, huge risk there. You talk about Elon and him, let's say, not being involved in the companies in one respect, huge problem right there, huge risk right there. The good news, Tesla wise at least, is, and I was having a discussion a little bit with my dad a couple weeks ago, was that if Elon just leaves, I still believe in the execution of Tesla to now get to that point. Barring 4680 major hurdles, which signals are that it should be okay soon enough. Once 4680s are kind of up and running, it's just a matter of copy and pasting these factories and then really just scaling logistics from that point. Yes, supply chain issues, but what's Elon going to do about supply chain issues? So after a certain point, I think Tesla-wise, I almost think that we're there right now. And I have to say, like, I feel like Wall Street definitely discounts. And it's one of my questions I have for Dan Ives. I'm interviewing on the channel next week. Is how much does Wall Street discount for Elon and discount for Elon time?
Oh, I think it's huge.
We do the opposite almost, where we appreciate for Elon, and they almost do the opposite, where they discount for Elon because risk, key man risk, right? And I still think Steve Jobs is probably the best marketer of all time. Elon might be close, but I think Steve Jobs is still the GOAT there. But I think if Elon could, and I think Elon's good now, where the point where he doesn't need to be on conference calls. He doesn't feel like he needs to be the voice of the company on earnings call. He can just let like Zach Kirkhorn kind of do that. And he can just be in the back working. I think that's kind of where he needs to be in terms of just being his best self, I think. I'm not speaking for him. I just think he doesn't like doing those earnings calls too much. He doesn't like Wall Street. But now we're at this point now where it's like, Wall Street can no longer ignore Tesla one way or another. They have to have a stance on it. And I think in the early days, obscurity is the biggest problem for companies. People don't know about you. People don't care about you. Tesla's at this point now where if you're on Wall Street, you have to have an opinion on Tesla. If you don't have an opinion on Tesla, how can you really be informed on Wall Street? So yes, Tesla-wise, I'm not too worried about it. But like you say, anything can be tweeted at any given second. That's why I have my Twitter notifications on for Elon.
But you did bring up a good point. I kind of think that maybe, Steve Jobs, they had Tim Cook, right? He's the operations guy. So we need someone who's like Tim Cook, right? Who's going to run the company for a foreseeable future. Yeah. So who is that second in command, right?
That's such a good question. And we were having that discussion on Discord. And to be honest, I don't know. I mean, you could say Drew Baglino. You could say Zach Kirkhorn, but really there's no second in command really to Elon, because Tesla is really multifaceted even right now, like Tesla Energy, Tesla Solar. You talk about Tesla. I mean, what they all have in common, you could definitely say, is battery tech for the time being. But eventually with robotaxis, you're going to need someone to run that. I don't know. I wish there was more of a clear second in command, like you say. And you know what? That might be another good question for me to add on the risks of Tesla, because it's true. That is a risk for Tesla, is that there's no clear second in command as well, at least.
Like you're saying, with the batteries and the cars, like that's already done. But like the vision part of it, I mean, the FSD, they got Andre and his team, Karpathy. So, but Elon did say he wanted to potentially leave in like 5 years or so, something like that. Is an earnings call that he may think about it.
I don't remember that exact moment, but I almost feel like it's less than, pardon me, it's probably less than 5 years, I think, already. Just because I think Elon's getting to that age where like he's probably having this existential crisis moment of like, if I'm, oh, by the way, he's not old. I'm just saying, he's probably getting to the point where he's like, okay, if I want to solve multi-planet, if I want to have, humans be multiplanetary, I'm not going to be alive for 200 years. There probably comes a point where he ditches everything and just goes for that one goal, because I think to him that one goal probably supersedes any other goal that he has.
It's true.
So don't know when that happens. I guess we'll find out soon enough. But good thing is Elon is still very much invested in Tesla, and he probably will be, even if he's not the acting CEO. He's already not the chairman. So there's that. But even if he's not the acting CEO, I think I think Tesla company will just be fine.
Right. I think the bot, like the robot, definitely is going to be maybe keeping Elon in a lot longer. And if he announces a new compensation plan, then that's going to be a trigger like, oh, he's in it for a long time, right? So I'm looking forward to something like that. So I just was checking, you did have this stock split theory. And I watched that video, and I also watched Farzad. I'm probably pronouncing his name completely wrong, but he used to be working at Tesla, and he's been producing videos about his days working at Tesla and his, what his outlook is on Tesla. And he gave his theory on the stock split, which bottom line, it's going to happen. So I'm just curious, like, what do you think is going to happen in 2022?
I totally think a stock split will happen. My video was 3 reasons why I think it'll happen this year. I'm still sticking to that, but as we sit here at 1,030, the odds are definitely lower. Ideally, I think I'm still pro split above 1,000. I think 1,100, 1,200, that's where you get into the territory of like, okay, like we kind of are waiting for this to happen. No, the big reason I had in there was for 2022 was because perhaps waiting until the employees of Austin and Berlin get onboarded, because I think a large portion of the stock split is sure retail investors and helping us.
It's really for employees.
It's really for employees, and it should be, right?
Yeah.
It's to be affordable for employees. And so if there are no employees, because Austin and Berlin keep getting delayed, I don't know what's the point of splitting prematurely, right?
Yeah.
So my reasoning is once these employees do get onboarded, giving them a cost basis that is more achievable for their paycheck, just psychologically owning more shares in a quantity number. It's not very rational speaking and logic speaking, doesn't really matter how many shares you own, right? If you split, that is. But if you own more quantity, you feel more invested. And I think there's a degree to that with Tesla that they probably want to inspire for their employees. And so as we sit here at 1,030, don't think it's happening right now, and obviously Berlin and Austin are not aligned. But yes, like you say, like once we get up to, I think once Tesla's up to like 1,500, 1,400, probably before then, both of these factories are online. Tesla's producing 4680 battery cell cars, delivering them now. Catalysts are there. It'll get to the point now where they probably will have to split. I am very pro split, pro share buyback, generally as an investor, of course, selfishly. Apple, it's the Apple model, right? What's made Apple?
Yeah.
Well, what's made Apple a $3 trillion company: splits and buybacks, and I guess dividends. But really splits and buybacks, right? Being able to buy their share. And Tesla's not at the point now where they're going to spend billions of dollars buying back shares, because they have a pretty good balance sheet at the moment. But 2 or 3 years when Tesla's stacking up all this money, and they're not going to be making a new Gigafactory every single year. I think Elon has said that much. Gigafactories only cost about 10 billion, a cool 10 billion.
Oh, it was 5 billion.
It was 5 budgeted, but I think cost for Austin has come closer to 10 is what I've read.
Okay.
So, at a certain point when Tesla is printing all this money, I think share buybacks and stock splits consistently do make sense. Just
one last question, because I've taken up a ton of your time, but this has been such a wonderful conversation. This is an easy one because you had a video on this. Is the 5-year outlook and price target predictions for Tesla, like base case, best case, and bear case for you? I think I went through your model, and you were using, the risk-free interest rate and all that. I'm definitely a cautious investor. So my discount rate's a lot higher. Gary Black's using 11%. Like for me, it's more like, I want my ROI to be 15% a year minimum. I think my most bullish case is still lower than some of the price targets on the street, because my discounted rate is higher. So I just want to put a caveat that this is obviously based on, it's a very personal journey for coming up with price targets, because it comes down to how you want to discount the company based on future cash flows and all that. So I just want to put this caveat that, of course, this is not financial advice. This is all for entertainment purposes only. So please, if you're watching this video, please do your own due diligence. So we're just doing this for fun, because we obviously, both of us run our own models, and I just want to know yours.
Absolutely. I think there's a couple key things to watch for. I think one is, okay, I think by 2025, and I kind of look at 2025, end of 2025 as kind of 4 years back discounting, because I think that gives us enough kind of timeline of being able to really judge, like right now, based on what Berlin and Austin and Giga Shanghai, Fremont come on, and everything's online. I think they can probably get to about 4.5 million cars. Maybe another factory's thrown in there towards the end of that timeline, but I think they could probably get to close to that with one more factory. So I think the plan is kind of laid out there of getting to that level. And I'm assuming about a 20% margin. So 4.5 million cars is what I'm hoping for in 2025 with my model, 4.5 million. And that's assuming a 50% compound annual growth rate in deliveries from 900,000 this year or whatever it was. So with a 20% margin on those, which some could argue is high, but operating margin is already at 14.4%. That's without gigacastings and without 4680 battery cells. I think 20% would be like Apple-like almost. And that would get you about a 2.5 trillion market cap in 2025 with a 55,000 ASP. I'm not a big believer in ASP coming hugely down. Like some models in 2030 have ASP at like 30,000. I'm not there yet with inflation. With a bunch of other factors, with Tesla increasing prices, and I don't think by the way this 4.5 million cars has very many $25,000 models in there. That gets to about 1,800 depending on your discount rate. This one is 7% that I'm looking at right now. If I change, can't change this to 9, but let's say if I change the time, maybe it came to 1,650 or 1,700 current present value. That assumes a lot for someone that's sitting on the fence and doesn't know anything about Tesla. That assumes that Tesla can build 4.5 million cars. First of all, I think they can in 2025. That assumes that Tesla can sell every single one of those cars. Again, I assume they can. You can argue otherwise. That assumes 20% margin. That's probably the biggest.
That's big. Yeah.
The biggest one, because you could make the argument that they're probably going to lower margin and just decrease ASP. Debatable, but that's only a 50 PE at that point. And for a company that's growing 50% EPS year over year, a 50 PE is a one peg, right? The peg ratio is 1. So paying 1, I think, is probably the most conservative estimate to kind of even that out for me a little bit. And so as Tesla sits here at 1,000, I personally don't look at this as something that I need to nail to the exact dollar. It's kind of like a risk reward spectrum a little bit. Tesla sits here at 1,000. I look at it like a $1,600, $1,700 stock. And this is just auto, right? That's another big caveat. I'm not assuming full self-driving robotaxis. A lot of people are assuming robotaxi revenue in 2025. I don't believe in robotaxi revenue coming in prior to 2025. At least I don't want to. And if it comes, it's a big call option for me because I don't believe in governmental red tape. We're already seeing red tape with just building these factories, let alone autonomous driving happening in the next 2 or 3 years. I think it's probably a 2030 question to have. That's just me trying to be a little bit more conservative. That's not assuming any Tesla bots or Tesla Energy, which Elon has said is going to be as big as Tesla Auto soon enough. So that's not assuming any of that. That's not assuming supercharging revenue through services. Like Tesla has just released their supercharging network out in Europe to other OEMs to come in and charge and pay for it. That's not assuming any of that, and that's all margin, right? Service revenue there, and so. That's about $1,600, $1,700, $1,800 is kind of that price range. I think this year we'll be telling if everything comes to plan and both these factories can come online and scale and margins stay at least steady, right? When you're ramping a factory, you talk about margin dampening a little bit, but if they can stay steady, I think towards the end of this year we'll have a lot higher a lot higher conviction in this model because all we'll have to do is copy and paste gigafactories. Right now, as we sit here, it's kind of like copying and pasting a factory that you don't know for certain how the unit economics will work out, but you have at least a technological idea of what Tesla says. And so by the end of this year, should we see unit economic levels from Berlin and Austin come through the way that they're projected to come through with 4680 battery cells, and the cars are coming out left, right, and center, then it's just a copy and paste model. I think Wall Street gets Tesla by the end of this year. If Tesla has hiccups, like Berlin was technically supposed to be online July of last year. So, or August of last year. So this is, again, execution of what can hold Tesla back up. So my discount rate there, 9%. I look at, by the way, the discount rate as, risk-free plus equity premium. I think Gary Black uses 11 because he assumes Tesla beta at 2.6, I think, to be, or a Tesla 2.6 beta trailing 5 years to be the same in the following 5, where I think beta will definitely.
It will shrink.
I think so.
Probably, yeah.
I mean, who knows? But I mean,
I
I
hope
think,
so.
yeah, I hope so. I think it'll come down. And as, by the way, and as beta comes down, as valuations, as discounts come up because beta is coming down, I think that's also a big boon for Tesla as it gets more predictable in the way that they make money. And then as we talk about FSD, that's just a whole nother step. Like, because with FSD, that's all margin, it's all robo taxis. It's like unlocking of a fleet of money. I've modeled out FSD subscription as its own business before, and you can easily probably get, or I can easily get to the price target that I have for just the auto business for FSD, assuming it's its own business with no fixed costs or very, very minimal. But I am, for the sake of me trying to be conservative for myself, I'm trying to stay true to just the auto for now.
Yeah.
When and if I think when we get to that point where, okay, this valuation is now fulfilled, then I'll have to look through other avenues to see where is the other alpha in Tesla right now. Because at that point, to be intellectually honest with yourself, you have to have the conversation of, let's say we wake up tomorrow and Tesla's $2,000 a share. Then we have to sit down and consider, okay, is this too high, too fast? First of all, just short-term speaking, but what else can we actually price in? Because something major would have to change for it to hit $2,000 a share tomorrow, right? But as soon as that does happen, I think FSD is probably the question that we're probably going to have of, okay, FSD, and Elon's hinted at full self-driving release being this year. So, and he's increased FSD pricing. He tweeted that out. And so as we sit here, FSD, I don't consider a big part of it. But if you want to be an ultra Tesla bull and you want to look at the real big, large upside, I think FSD is what you're probably having to look at and model out.
Right. So when you mean FSD, do you mean just the uptake of the software because it's pure profit in essentially, or you're talking about robo-taxi situation where
Sorry, go ahead.
I was going to say, so just for listeners that, well, I think both of us know what we're talking about, but just in case. So for robo-taxis like the FSD, there's a bullish thesis that once FSD gets to level 5, which means it doesn't require a human in the car, then you can start using your Tesla cars as a taxi business, and it's got no employees. So then there's going to be this surge of cars that are going to be in fleets, like taxi fleets, and it's just going to be huge margins, and the cars would be even more expensive because now it's actually a business to own a Tesla car. So that is like, some people are just saying it's like multi-trillion dollar market cap. Oh, but I just want to differentiate. Are you talking about that, or are you just talking about that FSD uptake rate? In the past was about 30 to 40% uptake rate. If it gets to level 4, where maybe you don't need to pay attention to the roads all the time with having FSD because it's gotten to a certain sophistication, then more and more people are going to pay for the FSD. And then that in itself would just play in the operating margins, like the profit margins would be higher because it's just like selling it to $12,000 software package in every car, 40% of the car. So I'm just curious which when you're talking about bullish, which bull thesis are you talking about?
I think both go kind of hand in hand, because for FSD take rates to really skyrocket, and I don't even think they're close to, I think they were, you're right, closer to 30. I would probably guess they're less than 10% as we kind of sit here for FSD take rate, and especially in China. Numbers out of China are FSD take rates
Like,
are very low.
Or not there. Yeah, I noticed that.
But for the robotaxi big ultra bull case, I think you would need level 4, level 5 autonomy, because only at that point would massive amounts of Tesla users start subscribing or buying FSD outright. As we sit here, Tesla FSD full self-driving package is $12,000. And I think, and they've just raised that from 10. And I think that's almost a direct signal to me of how close they are to solving FSD. Elon has said full self-driving is worth about $100,000 to the car. So as that goes up and wider release comes out, it's funny because if wider release comes out tomorrow, let's say hypothetically in a world, and everything is working perfect, and what they don't have right now, let's say, is just the opportunity for you to make money. But if by yourself, you can sit in the car, turn on FSD and use it. And we saw a wider release of that, and it was getting great traction. You would immediately see a mass amount of people buy full self-driving. And if Tesla saw a mass amount of people buying full self-driving, they would just increase the price, right? And so that is the signal to me. It's like you need the technology to come to fruition before you're going to really see the large amounts of uptake in the take rates. I don't think we're too far away from that, but I live in a world where I discount as much as I can. I try to play conservative, hopefully. And I think even if Tesla hypothetically solves for level 5, for argument's sake, tomorrow, I don't think they can get government approval in a lot of areas to turn that on and to run these robo taxis. I mean, in Vancouver, we just got Uber and Lyft literally 2 years ago. Think about that. Like, I'm not sure where your listeners are from, but like literally 2 years ago, the start of the pandemic is really when we got, or around there is when we got Uber and Lyft. So we're behind. I think if robotaxis came online, and if it took Uber that long, like, and that's with a human driver, robotaxis, like that's like years and years away for government approval here. If you're ultra bold, though, all you're going to say to me is, look, with full self-driving, there's data behind it, and you could just simply show regulators data, and they would have to buckle. And I guess you can make that argument. I just don't have that much faith in government. So, but you talk about margin, that is very margin heavy, like 90 something percent.
Yeah. Like just think about, like, if you had a $12,000 software package that someone's buying and the car's like $50,000, like, there you go. There's your 20% profit margin. Like, right there, it's like as simple as that. But then, but if you do look into the financials, you're already noticing the profit margins are increasing non-GAAP for Tesla. And then over time with the Gigapress and with the 4680 batteries coming on board. And what else was there that they're planning? Well, just the fact that they're just seem to be very efficient with manufacturing, and Shanghai margins. Like, I don't know who's cost that in, but like, the cars coming out of Shanghai are probably higher profit margins than, say, Berlin or Austin, just because labor and all that. So taking all that, it's not far-fetched to think from 14.60, I think you said 14.68 to like 20. Yeah.
And yes, there's tax and depreciation and all that stuff to pay on top of that for sure, if you want to discount even more conservative off of it. But yeah, I think FSD, it's like AWS for Amazon, right? If people don't know, AWS, Amazon Web Services, it's a very, I think, small portion of their overall revenue, of course, but it makes up something like 20+% of their net income.
For that, Amazon wouldn't be profitable. Like, I mean, like, because they're just selling the Prime membership, like, it's negative cost because, and the operating margins or the profit margins for every product they sell, third party isn't huge. It's the Amazon cloud. That's like a huge cash grab for them because it's a software. It's like just, they built it and then it's just they're using it as leverage, right?
And on top of that, I mean, you also grant a higher multiple for software, right? If you're in traditional legacy OEM, your multiple that you're going to get is not very high from the marketplace. But if you're strictly speaking a software company, Tesla is not just a software company. But let's say, for sake of argument, we just wanted to value the FSD portion. The multiple that you can get on a software company is dramatically higher than they could ever get on their hardware side of their business, right? Just from kind of sheer scalability and profitability. So I think it's good days ahead still. Who knows what's going to happen in the short term as we sit here. Anything's possible, but really the 2022 is the year to look towards execution for Tesla and to see these factories finally come online and start to produce slowly, ramp up towards the end of this year. We're probably going to get a better idea of how fast they've ramped up. I think it's going to be hopefully as fast as Shanghai. That might be asking a lot, but I think on their hands for so long, they must have been putting in practices to hit the ground running faster than maybe Shanghai when they were still building and they came online. So, to be determined as we sit here, but the earnings growth that Tesla is going to have this year is really the story to look at to see where Tesla heads to in the future. If Tesla can kind of give proof to the Wall Street analysts and to Wall Street that, look, we have earnings capability here way more than legacy OEMs would have. And on top of that, you're valuing us as just a car company, but look at FSD, look at XYZ product or energy. If energy can scale up towards the end of this year, that would grant Tesla, I think, more runway with a lot of bearish Wall Street analysts. But again, like you said, that's our alpha, at least is what we hope, is them not understanding Tesla and us understanding Tesla. But as one can be, as one should not be, is arrogant in the market and to think we're the only right people. And time will tell as we kind of move forward. But what a story it is to be following Tesla.
Yeah, I think the next decade is going to be something really cool to look forward to. So thank you so much. It was great. We answered a lot of questions, and I'd love to do a future interview with you where we visit some of these discussions about the catalyst, probably maybe in the second quarter, third quarter, if you're up for it. We'd love to get a series with you on Tesla, since you know Tesla every single day. You watch it and you actually post it on your live stream. That's why.
I had a great time. Thanks for inviting me on. I had an awesome time, and yeah, I'm totally down to do this as we move forward in the next couple quarters here.
Okay, awesome. Thank you. Anyways, have a great day.
You too. Take care.
Okay, I'll see you in the next video.